Right now, at this very moment, something extraordinary is happening to money. If you own silver, or if you've been thinking about buying it, the next few minutes may be the most important financial information you receive this year. What you're about to hear is not speculation, it's not hype, and it's definitely not the kind of surface-level commentary flooding social media. Every fact in this presentation is verifiable. Every number can be independently confirmed. And by the end of this video, you'd all understand why the silver market is experiencing something that hasn't happened in more than 4 decades. Banks are scrambling, vaults are emptying, and price action is defying everything mainstream finance said was impossible. This is happening in real time. As this video is being recorded, silver is aggressively hovering near $82 per ounce. Trading floors across New York lit up as screens turned green instead of the red many institutional traders were positioned for. Major bullion banks had expected silver to retreat toward $40. Instead, physical demand overwhelmed paper short positions. At the same time, CME launched a new 100-ounce silver futures contract, marketed as retail-friendly. But analysts immediately questioned the timing, because this launch arrived during the most severe physical supply squeeze in over 40 years. Here's where it gets serious. The ratio of open interest to registered COMEX silver inventory is now over 416%. Registered inventory is silver actually available for delivery. Eligible inventory simply means silver stored in vaults, not for sale. Estimates suggest only 28 to 103 million ounces are truly deliverable. Yet paper claims run into the hundreds of millions. That's a mathematical impossibility if even a small percentage of contract holders demand physical metal. This is the foundation of the crisis. Meanwhile, Shanghai is trading silver at a $6.50 premium over New York spot. That creates instant arbitrage. Buy in the West, sell in the East. Metal flows one direction. China has implemented export restrictions. Silver entering China does not leave. This one-way drain has accelerated through 2025 into 2026. The result? A structural global deficit of approximately 200 million ounces per year, 4 consecutive years. Decades of above-ground inventories are being erased. Unlike gold, 56% of silver demand is industrial, and once used, it's gone. Solar panels, electric vehicles, AI data centers, high-performance computing, medical devices, water purification, electronics. Silver is consumed. Recycling remains uneconomical. Meanwhile, artificial intelligence infrastructure requires massive silver inputs for conductivity and thermal management. EVs require silver for motors, battery systems, and charging networks. Solar installations permanently remove silver from circulation. This isn't speculative demand. This is physical consumption. Here's the problem. About 70% of silver production is a byproduct of copper, lead, and zinc mining. So even at higher prices, silver supply doesn't respond quickly. New mines take 7 to 12 years to develop. Ore grades have declined roughly 40% over 2 decades. Costs have risen, production has plateaued. All-in sustaining costs now hover around $15 per ounce, placing a fundamental floor under prices. Margin requirements have risen to 18%. At $82 silver, short positions are becoming extraordinarily expensive. Lease rates in London are above 6%, signaling severe physical tightness. Industrial buyers are bypassing banks entirely, sourcing directly from refiners. Retail premiums exceed 30%. Mints have implemented allocation systems. Coins and bars are selling out. Physical silver is commanding prices far above futures quotes. This disconnect between paper pricing and physical reality is the heart of the crisis. Exchange-traded funds continue absorbing millions of ounces. Investors increasingly understand counterparty risk. They want allocated metal, outside the banking system. Meanwhile, BRICS nations accelerate de-dollarization. Gold accumulation by central banks exceeds 1,000 tons annually. Silver isn't held by central banks, but it benefits from the same hard asset migration. The gold-to-silver ratio remains above 80:1. Historically, closer to 15:1. A reversion implies silver north of $200. Silver broke out of a multi-year consolidation between $20 and $30. $50 collapsed. Short covering followed. Momentum traders entered. Next resistance sits near $83 or $85. A sustained move above this zone is expected to trigger systematic buying from hedge funds and algorithmic strategies. Commercial traders are reducing shorts. Managed money is aggressively long. Open interest remains elevated. This is not just covering. This is new capital. First position day for March contracts arrives February 28th. Normally, most contracts roll. But this time, industrial users are standing for delivery. COMEX simply does not have the metal. If forced cash settlement occurs, confidence in futures pricing collapses. This would mirror the nickel crisis of 2022, but on a much larger scale. The exchange can't force eligible inventory into registered status. Owners aren't obligated to sell. Decades of paper expansion have created claims against a finite physical base. That illusion is cracking. This isn't another Hunt Brothers episode. That was speculation. Today is structural deficit, industrial consumption, global demand, and decentralized physical buying across Asia, India, and the Middle East. Silver has monetary history stretching back thousands of years. Every fiat currency eventually fails. Silver endures. The $82 price is not a peak, it's a recognition. What we're witnessing is the collision between paper abstraction and physical reality. Mining underinvestment, industrial demand, currency debasement, geopolitical tension, all converging. The silver market is entering a new era. Those holding physical metal are positioned on the right side of history. The March delivery cycle will reveal just how fragile this system has become. Beyond that, the deficit continues to grow. Silver is no longer a forgotten metal. It's becoming a strategic asset. This presentation is for educational purposes only. Always assess your own financial situation before making decisions. Thank you for staying to the end. And stay informed.